Bitcoin and the Fed, how economic data will shape the trend. Hey guys, it's Keith Allen, and we just had a fresh batch of economic numbers come out, actually, and more on the way throughout the day, throughout the week, and throughout the month, for that matter, that the Fed will be paying attention to. All eyes, of course, currently focused squarely on tomorrow's unemployment and non-farm payroll reports. But we can give you a little update on what just came across the wire. And for that, we'll take a look and really kind of analyze how this might impact what's going to happen here as the trend develops, moving through the week, moving up to and through those forecasted rate cuts coming after the FOMC meeting on September 18th, and then on, obviously, once those cuts begin. So before we climb in, just a real quick bit of housekeeping. If you like the streams, please smash all the buttons. Make sure you hit that subscribe button up above so you don't miss any of the live streams. And, of course, the live chat is open on YouTube. If you'd like to comment and join the conversation, I'd love to have you. And as always, I do appreciate the support, the ongoing support from you guys, and I love the comments. I engage with pretty much each and every one of them. So keep them coming. Without further ado, let's climb in. And first, take a look, in case you haven't seen them, at the economic data that just came across the wire here. A few minutes ago, actually. So let's start here on the unemployment data. And you can see here that we just had a new report come across the wire, and as forecasted, right? So in my opinion, and I'm going to preface this all with, I'm not an economist, but I've been kind of looking at this, and, like, we're at the good news equals good news phase of things. Now, social media platforms have been polluted with noise about September being a historically bad month for traders. Yesterday, we talked about that in depth, and I showed you that, that almost half of the Septembers in Bitcoin's young life have actually been green months. So, yes, recently it's been that way, but not so much. Actually, last September was also green for Bitcoin. If you want to go look at that, you can actually just look at the chart for yourself on the monthly, or you can look at yesterday's analysis, which we went in depth on that. But this is like a speculative. It's not even a myth, right? I mean, it's like the FUD of the day, and we hear it not just in crypto, but we really hear it across media that September is historically bad, and this month may prove to be bad, but I would much prefer to make my decisions on the data and the charts rather than just give in to the fact that September just should automatically be bad because some people say it should be. So in this analysis, we're gonna work around that. Okay, so I'm not just going to give in to the bias that September is going to be a bad month. I mean, arguably, the chart looks like shit. Not going to dispute that. But things could change. You know what? We actually had a trend precognition signal here a minute ago from last night, and it just invalidated. And I was going to get into that because, and that was on the daily chart, by the way. I was going to get into that because what we're seeing right now, this price action is, as you know, if you're a trader, has been kind of difficult to trade. And you would expect, off of the news that we just had, that the market would rally because that was positive economic news, that the jobless claims are not spiking. The continuing claims are also actually edging down, and that the 4-week average is edging down slightly. That these are things that speak to the labor market, and the labor market, in my opinion, is the biggest concern the market has right now, right? We don't want to see a huge spike in unemployment. And historically, once unemployment starts to rise, we do see that trend continue. The needle that the Fed is trying to thread is they want to get these rate cuts going so that they can keep that under control, mitigate the potential of a big spike. And the data that we're seeing right now might actually support that idea. And so I think at this stage, it's not a matter of, are we going to see a rate cut this month. It's, after the FOMC meeting, it's how much is it going to be? Is it going to be a quarter point or a half a point? And I've gone back and forth on my theory on that, and a lot of economists say, hey, it doesn't really matter because we know, the market may not even care because the market knows that rate cuts are imminent and that we're going to, continue, start and then a cycle of rate cuts that will take us back down significantly, that will start in September, forecasting around a 1% cut by the end of the year, and then continuing cuts into 2025. Well, that may be the case, but there's also a theory, and this is really the one that I've been subscribing to, is that the size of the cut matters in that a more aggressive series of cuts speaks to maybe the urgency of the situation. And that urgency would be, hey, we're really trying to counter what's happening with the economy. And we're concerned that things are going to spike, namely unemployment. And I think that a more controlled, methodical approach, and let's face it, if anything, Powell has been controlled and methodical through this entire process, right? So I think that approach speaks to the steadiness of the hand and the patience and the conviction that, hey, we can just kind of work our way into a softish landing, rather than we're nosing down into a crash. So that all remains to be seen, right? And of course, all eyes will be watching tomorrow's numbers to see how that shakes out. So let's now go back to the charts. This does not look good, and it's not what I honestly expected after that report just came across the wire. I expected to see some recovery here, but here's the deal. Here's what I don't like about what we've seen so far. We obviously have this lower low here at the 49.5 range, and we could call that 50K, where we had prior consolidation. Let me clear these trend precognition signals out to make it easier to identify the charts, what we're talking about here. So we're kind of at the moment in a no man's land where we've been consolidating in this range, which I think has been good. And as long as we stay in that range, I'm comfortable. At the moment, we're edging out of the range, which is obviously concerning. But I've also felt like we were going to go back and retest this. So to that end, I really want to see this retest. And even more than, since 50K was broken, might we even go lower, right? So will this hold? And I looked at this yesterday quite a bit. The potential for a double bottom here would speak well for these death crosses that we've had and the golden cross that we're seeing on the weekly chart. So that would be a positive thing if we got the double bounce from there. That would be kind of consistent with what we've seen off of other death crosses that were, multiple death crosses on that daily time frame. And so that would make sense to me if we bounced from there. But I also like the potential to go hit this trend line. And this trend line has been rock solid, right? Something else that's interesting to me on the weekly time frame is that this trend line gets close to, at the moment we're right between the 50-week moving average and the 200-week moving average, and of course the 100 is just crossed here. Over time, this could drag, this will drag up. So, if this doesn't happen today, for example, and we continue to chop along and even grind our way down, then this could drag up into this range. So this is right in a really kind of a critical range of interest for me. But historically, that 50-week moving average has been a pretty good test of things. Let's see what it looks like on the daily. On the daily, obviously we've lost it at this point. So we have to reclaim, we've lost all of the key moving averages, and we've seen some resistance here recently up against the 21-day. We spent a long time trying to reclaim this 50-day. We reclaimed it briefly, and then things broke loose again. So, we got to do this one level at a time to climb our way back up. So again, with the unemployment data coming out tomorrow, that's going to be a big thing that people are looking at, that the market is looking at. And in terms of what we're seeing right now, hey, maybe it's the fact that we have all this liquidity sitting here and we have some suppression coming down. This is some strategic liquidity movement going on here in the order book, as we can see on FireCharts. And so, maybe the market is getting a bit of a, well, at least bears are getting some help um, from this. Maybe somebody's really trying to protect some shorts here and get those and close those shorts at a lower price. We have the I've been looking at the Kingfisher liquidity map here quite a bit lately, and we can see that we actually cleared out down to this 59K level, went and cleaned this a few times actually, and it keeps replenishing. But I also think that this is kind of low hanging fruit up here, at least to this 59K range. And some of these up here in the 64, 65K range have actually already closed. So the more time we spend down here, the less likely these are going to get cleaned. I'd like to see us go up and get this. And I can tell you that a week ago, I had my eyes on this getting cleaned. And, so far it hasn't happened. So we'll have to see how things develop here moving forward. And perhaps if we have a decent unemployment number tomorrow, then more of these will close because they're in good profit here at this point. Again, we'll just have to see how that develops moving forward. So again, my eyes are on the unemployment data tomorrow and the non-farm payroll data coming out tomorrow. I don't think that the market wants to see a hot number. I know the market doesn't want to see a hot number. I mean, that's really going to speak to the the potential for a harder landing. Whereas a cooler number or a flat number even to me would be okay. Cooler number or a slightly cooler number, probably well received. I think if we have a drastically cooler number, then the then the market scrutinizes those numbers. MBL says, browse the Kingfisher low leverages. It's pretty scary. Let's see what that is. I have not looked at that in a bit. Let's see. Let's get a refresh on that, bro. Oh, yeah. That's pretty scary. Definitely scary to the downside, but look where it brings us, right? We have a lot in this 50K down to 50K, um, about 27 million roughly. And of course, these are estimates, right? Um, that's definitely interesting. Thanks for turning us on to that. And then all the way down to 40K, right? So about 74 million down to that 40K level. I think if we go that low, then we really have some issues with the trend, to be honest with you. Um, for me, I am at the moment pretty married to this trend line. If that breaks, then we have, in my opinion, probably a long way to go, likely down to this 25-30K range. And again, the trend line, the moving averages are adjusting over time, and depending on how long it takes for any move to develop, these moving averages may move up. This moving average may draw down. We'll just have to see how that develops. But the charts arguably do not look good right now, no doubt about it. But this can all change in an instant. I really want to see this retest at least of this lower low here around 50K. See if we get a double bounce out of that. And tomorrow's economic data may be probably going to be a catalyst for that. With one footnote here, the footnote being liquidity dampens volatility, and as you can see, we have liquidity building here at the 55K range. There's about 32 million, 31 million right here, stacked on 55, and a little bit more laddered up here into the current price. This is easy to move up here where we have this void. These dark zones are thin liquidity, so easy to move back up. We could very conceivably round trip this range, and I promise you, whales are not trying to be your friend right now. They've been gaming this for days. They've been gaming it really since the beginning of the month with all this liquidity movement and the suppression we saw over the weekend. And so I expect that to likely continue as we move through the month. Something else I want to talk about, and we're not going to go in depth on this today, but we obviously have rate cuts looming. And so one of the things that we need to evaluate, and I've done this before, but we'll do it again as we get closer to that September 18th FOMC press conference, is how price tends to react after rate cuts. And again, much like we hear all the noise about September being a bad month, we also hear a lot of noise about how the markets tend to react to rate cuts. And the noise says, oh, the market always goes down. Well, the market doesn't always go down after rate cuts. Sometimes it goes up, sometimes it goes down. Sometimes there are short-term corrections prior to things stabilizing. And so we're going to get into all of that here. Here's a prime example. Back in 1989, right? This yellow line is the Fed funds rate. Rates are cutting, unemployment was going up. And what was happening to the market? The market was going up. Yeah, there were some dips, but the market continued to climb after that. So, and here's the opposite of that. Back in 2000, they cut rates. Market started to go with it. Took a couple of years for things to stabilize. They cut a few more times and then on those secondary cuts in 2002, the market was stabilizing and began to take off again. So we're going to look at this in depth as we get a little further down the road here, approaching that September 18th rate discussion. In the meantime, unemployment sits at 4.3%, and we will be watching tomorrow to see if that number changes. Mike asking, can I elaborate on liquidity dampens volatility? Seems counterintuitive. I would thought liquidity grabs to cause volatility. So liquidity obviously can attract price, but think of liquidity as if you think of it as friction, okay? And here we have a view where we have liquidity stacked down at 55. We have more stacked at 56. We have a little bit here at our current price, and then we have a thin zone here. Price can move very quickly and easily through these thin areas, through these dark areas on the chart, whereas price does not move so well through heavy buy walls or sell walls. So think of it as friction. And so if price could clear this current resistance, it could move very easily. Now, big mega whales aren't going to buy into these voids because they're going to have slippage, but it takes very little. You can see this: $1 million, 880,000, 600,000, 240,000, 33,000. 30, not 33,000, 330,000. So through those thinner areas, it's easier for price to move. And if we zoom out to a wider version of the chart, we can actually do some filtering here to make it easy to see the key areas on the chart where liquidity is. Now, in terms of your other part of your question about, you think that liquidity grabs to cause volatility. So yes, the journey to go get that liquidity causes volatility, but the liquidity itself, as you can see, right? Price isn't shooting through this because we have this liquidity here. Now, if we do some filtering here to filter out the lows and focus on the key areas, the most important levels on the chart, we can see that we have a nice concentration, decent concentration of bid liquidity here at this current range, between here and 55K, and then it thins out. So if we drop through this 55K level, it's a relatively easy free fall down to 50K. Doesn't mean it's going to be a straight line, but it is easier to get through this thin liquidity than it is to get through this thick liquidity. So that's what I mean when I say liquidity dampens volatility. Now, conversely, to the upside, we do have a bit here of resistance up to 65, 62K, and then a little bit of a void, and then more at 65K, and then a bit of a void, and then an easy path to 70K. So these things take time to develop. The beauty of FireCharts is we get to see when new liquidity comes into place, when liquidity moves, when it gets pulled. All of these things help us paint the picture to make our trading decisions. Here we are on the monthly time frame, and if I boost this side a little bit, you can see that liquidity is building here about 29 million above at this 55.5 level, and another 23.5 million at 55K just below it. So it's building here. This may go get taken, but look how easy it's going to be to get to this if this goes away. And now, to make it, just so you don't think that there's absolutely nothing there, know that I've filtered out the lower volume to make it easy to see. If I remove that filtering, you can see there is actually some liquidity there. It's just not super high relative to the other areas on the chart. Hope that helps you out, Mike. And MBL asking, would dropping below 50 be a big fall then? Well, you can see, let's zoom out a little further and see what's there below 50. Now, you can see that we had some volume at 45K, and it was split yesterday. Some of it moved up. Looks like some of it may have moved down. And so now we have some bid liquidity at this 38K level, some at the 40K level, and not a lot of friction down below. Let's filter out those lows again. And you can see there's not a lot down there. So yeah, that would be very concerning. If we break this 50K, it's an easy ride. At the very least, there's a glide path down to the trend line, in my opinion. And then from there, if we lose that trend line, we might get some a hopium bounce here from the 200-week moving average. That's kind of the last line of defense. You lose that, and we're going right down to prior consolidation levels. For me, that would be this 25 to 30K level. I think that would be that would hurt a lot of people, but it'd be a fantastic generational wealth buying opportunity that many of us thought had already come and gone. So there you have it. Going to leave it right there, guys. If I see things develop through the day, I will do my best to chime in and keep you updated. In the meantime, if you like the stream, do me a favor, hit the like button and share this thing with your community so we can grow this channel together. I appreciate the support, guys. Keep the comments coming. And thanks again. As always, I hope you have a fantastic day. And let's get this out of there. As always, trade safe, my friends.